Welcome back to PhatBear Pod. It's your boy PB, coming at you live on this fine Wednesday. Hope you're all caffeinated and ready to stomach some crypto chaos. It didn't take long for Bitcoin to yeet itself back down to 77K. 1 minute we're teasing 80K. The next we're eating dirt again. The total crypto market cap is at 2.46 trillion, down a casual 1.68%. The 24-hour volume, that's taken a 20% nosedive to 130.3 billion. Seems like everyone's too busy panic scrolling X to bother trading. Bitcoin's dominance is still flexing at 62.5%, and the fear and greed index dropped 4 points to a lovely 15, putting us right back in extreme fear territory. For alt's performance, the top winners are Ampleforth Governance, Neo, Ardor, and Gas. The biggest losers are Barachain, Mubarak, Avalanche, and Sats Ordinals. On the macro scene, the tariffs just got spicier than a leveraged altcoin pump. Trump's tariff game has leveled up. As of today, those reciprocal tariffs he's been hyping, starting at a baseline 10% on imports from damn near everywhere, have morphed into something way uglier for a bunch of countries. We're talking 11% to 50% on 60 so-called worst offenders. Now we've got nations like Vietnam staring down 46%, Cambodia at 49%, and the EU taking a 20% jab. This isn't just a trade tweak. It's a sledgehammer to global supply chains. Prices are going to climb. Your iPhone, your Walmart haul, your altcoin mining rigs, all of it. Trump's out here saying it'll bring jobs back to the States, but economists are already screaming recession, and the stock market's been puking for days. Let's zoom in on the real fireworks. China's getting slapped with a 104% tariff. This is economic warfare. Plain and simple. China's exports to the U.S. are basically dead on arrival now. But China's not the pushover it was decades ago. They've been cozying up to other markets, Middle East, Southeast Asia, and their state funds are propping up their stocks like a whale bot on a shitcoin chart. Meanwhile, U.S. consumers are the ones eating the cost of inflation's already ticking back up. Now, we're diving into some spicy crypto news straight from the headlines. The Department of Justice just threw its National Cryptocurrency Enforcement Team right into the dumpster. They were the ones who pinned Binance and CZ to the wall for money laundering shenanigans. Now they're gone. The DOJ's memo basically says, nah, we're done policing exchanges and mixers. Let's just focus on the cartel and terrorists. The feds are stepping back from the crypto sheriff gig, and the U.S. is officially turning into the Wild West of digital assets. There are rumors that the FBI's will be taking over with a new crypto unit. But let's be real. This just feels like swapping one nosy babysitter for another who's just as likely to raid your stash. Crypto's already a circus. Now it's a circus with no ringmaster. Exchanges? Mixers? Protocols? They're basically getting a free hall pass unless they're caught red-handed transferring money for Kim Jong-un. Next story. U.S.-listed spot Bitcoin ETFs just got punched in the gut with $326 million in outflows yesterday. For days in a row, investors are running for the exits. Over 4,120 BTC got yanked out, and it's got everyone clutching their hardware wallets, wondering if this is the big one. Bitcoin sitting at 77K after that earlier dump, and now the ETF scene's looking like a ghost town. This love-hate relationship between Bitcoin and TradFi will continue for a long time. There are talks of Bitcoin breaking away from traditional markets, but it's still got one foot in the old world's liquidity pool. After all, the ETF flows are driving demand from institutions and retail. When Wall Street sneezes, Bitcoin catches a cold. And right now, it's flu season. Last crypto story. Argentina's chamber deputy said enough's enough and voted to launch a full-on investigation into the Libra meme coin fiasco. We're talking 3 draft resolutions passed to summon and grill top officials, including the Minister of Economy, over their ties to this disaster. Back in February, President Javier Milei, the chainsaw-wielding libertarian, tweeted out some hype for Libra. The token's fully diluted market cap shot to $2 billion, only to crash 90% like a rug pull straight out of D-Gen's nightmare. One resolution sets up a special commission to sniff around, another calls in the bigwigs, and a third demands a report from the government on what the hell went down. Congressman Pablo Giuliano's out here channeling his inner truth seeker, saying it's time for Congress to audit whether there's harm to Argentina. Time for some hot DeFi news off the shelves. Ripple pulled the trigger on what's being called one of the biggest deals in crypto history. They scooped up Hidden Road, a multi-asset prime broker, for a cool $1.25 billion. Now, if you're new to this circus, prime brokers are the grease in the financial machine, clearing trades, lending cash, and keeping the big dogs like hedge funds and institutions humming along. Hidden Road's no small fry either. They're clearing $3 trillion a year across 300-plus clients, from Forex to digital assets to derivatives. Hidden Road's going to use Ripple's RLUSD stablecoin as collateral across its brokerage goodies. That's a big flex for a stablecoin that just launched in December and already hit a $300 million market cap. They're also testing the XRP ledger to settle trades in minutes instead of the 24-hour fiat slog. Hidden Road's also getting a fat stack of Ripple Cash, billions more, and they're migrating post-trade ops to the XRP ledger, faster settlements, lower costs. Sounds like a dream. Next story. We got a big shot whale's been swimming around the Avalanche blockchain like they own the joint. This guy's been playing high-stakes poker on GMX, a perps DEX that's basically the Wild West of crypto trading. For over a year, this whale's been holding a monstrous $15.5 million long position on Bitcoin. Not a bad move in a bull run, but in current market conditions, that's like betting on a three-legged horse at the Kentucky Derby. Just a couple days ago, the crypto gods decided it was time to humble this whale. Bitcoin, being the moody diva it is, took a dip faster than my portfolio during a rug pull. The whale's position? Toast. Liquidated. Wiped out like a sandcastle at high tide. GMX raked in over $13 million in fees from this single trade. What happens to all that sweet fee money? About 30% of it, roughly $3.9 million, is getting scooped up to buy GMX tokens and dish them out to stakers on Arbitrum and Avalanche. Last DeFi story. Arbitrum DAO is supposed to be a good example of Layer 2 decentralized governance. But last weekend, this guy Hitman-leaded ETH strolls like a crypto cowboy and drops 5 ETH on a platform called LobbyFi. What does he get? A whopping 19.3 million ARB tokens worth of voting power. That's roughly $6.5 million in governance muscle, more than heavyweights like Winamute or L2Beat have in their arsenals. And he uses it all to push some dude named Cupo Joseph onto Arbitrum's Oversight and Transparency Committee. Cue the collective WTF from the community. Now, LobbyFi sounds like a shady lobbying firm, right? Well, it kinda is, but for DAO. It's a slick little platform where ARB holders can rent out their voting power for a quick buck, and buyers like Hitman-lead ETH can snatch it up to flex on governance decisions. Think of it as Airbnb for votes, except instead of crashing on a couch, you're crashing a DAO's democracy. Posts on X are lighting up over this. Some calling it a governance circus. Others saying it's just a natural evolution of token-weighted voting. Me? I'm over here chuckling, because this is just the same crypto in 2025. Same greed, shinier toys. The daily airdrop today is Multipli. Multipli is a shiny cross-chain yield farming platform promising up to 35% APY on your BTC, ETH, USDT, USDC, and whatever else you got stashed in your wallet. Sounds juicy, right? But let's cut through the hype and figure out how to actually farm this thing. It's invite only for now, so you'll need an invite code to get in on the mainnet action. X posts are tossing around codes, so snag one from there or beg on their Discord. Next, deposit your asset and you get staking tokens like XBTC or XUSDT, representing your staked assets. You also get orbs for holding these LST. These orbs are loyalty points you can hoard for potential token drop. That's all the jazz this Wednesday. See you guys tomorrow. PB out.